What's up, you guys? It's Matt here. So we've been waiting for information this month, thinking, oh, I guess we can't say that we thought it was going to decrease because forecast was actually showing that it was going to increase. But not only are we looking at just an increase, we're looking at kind of a double whammy to where we've seen it over expected numbers. And that's where the CPI or inflation data honestly just surprises us, and then we start to see the market that just doesn't look great. And honestly, it's all depending on who or how people react to the inflation data. It's not necessarily about the inflation number itself. It's just how people react to it. So honestly, it's very, very interesting to see the numbers as of where we are right now and see how people are reacting. But when you see this title talking about how inflation messed up my portfolio, absolutely has messed up my portfolio. Even my long-term dividend portfolio, that's primarily ETFs, it still messes up my entire portfolio and all of the gains that I have seen over maybe these last few months. I've really only been holding this portfolio for probably 5 months at this point, or three. I don't really know exactly how long it was, but maybe it was a little bit less than that. But the point is that I've been holding it for a short period of time, but I've seen significant gains within that time period, and I've also been able to add a lot to it. Now I'm still up, just to clear things up. I am still up on my overall portfolio, but I still, struggle with seeing it decrease by that much, especially when you're investing into things that are more consistent and not necessarily going to fall heavily off of one position. It's just as you have more and more, you see more and more that starts to fall off, if that makes sense. So before we get into this, make sure you guys hit that like button, hit the subscribe button. If you want more content like this, talking about the stock market and inflation and all that stuff, feel free to let me know in the comment section below. We will provide as much data as possible over here when it comes to stocks, because I love stocks as well. I invest heavily into the stock market, 529 accounts, Roth IRAs. I understand finance a lot more, except for this personal finance question that was asked to me while I was on the golf course. But I'll get into that in another time. Maybe if we have like a live stream, or if somebody asks me in the comments, I'll probably talk about that. But it was very simple. Anyways, let's go ahead and get into this, and let's start with the inflation data. I think that's kind of where we need to start. At 8:30 today, 8:30 a.m. Eastern, we got this data. We got this information that showed exactly where the inflation data is for now, where the expected inflation rate is. So if we talk about the actual CPI data, we're seeing 3.5% inflation. That's the actual number that came through. The forecasted number was 3.4, as well as consensus was 3.4. Previous was 3.2. Now, why I say this is a double whammy is because we were expecting for this to increase. So we knew that it was going to be more than previous month. That's the first whammy, right? But then you have the second whammy where it's a 3.5 instead of 3.4. So not only is it higher than previous, but it's also higher than we expected, which is honestly not the best scenario, best case. So usually people react in a negative manner. Now, sometimes you see a bounce off of these to where you see it completely push back up after seeing an overreaction of some sorts. Just like if you were trading in the beginning of the market, let's say the day opened and you see it move aggressively one way or the other, a lot of times you will see a bounce because it moves so aggressively that it's either overbought or oversold at that moment. So then you'll see it bounce from there, where people will buy in or sell off that position. But anyways, inflation rates, this is where it looks, and how it looked previous to this. If I wanted to look at, let's say, 5 years, you can see how when this was at its highest point and how it was continually decreasing. Then we hit this low point of 3%, and we keep going above and 3%, and now we're at 3.4, 3.5% as of right now. So again, not really necessary for an overreaction, but I can understand it because of the double whammy that we had with being higher than previous as well as higher than expected. But if we focus more on my portfolio, because that's what I want to focus on. If we focus on my portfolio, I'm currently standing at $38,000, which honestly might be more than what you've seen in my previous videos, because I believe I did invest a little bit more money recently. Now, it is significantly down, as you can see in the last day. It's down 2%, or $821. That is a lot of money that it's down in a matter of 24 hours. Seeing it pull back that far doesn't really sit well with me, because while I was at 39,000, at some point I was, or now I'm down to 38,000 and kind of pushing down to 37,000 if all continues to go the same direction. You can see every position that I have in my portfolio is negative, no matter if they are a consistent mover. Long term, they look great. Short term, it just doesn't look good today. It's just not. It's not that day, right? If we look at the last week, we're down 587%, or 587%, $587 and 1.5%, 587%. It would be crazy. If we look at the last month, we're down $184, and the last 3 months, we're down $54. The last year, year to date, I guess, we're down $46.88. So all of the gains that we received over this last maybe 3 or 4 months, we're now seeing a slight loss in, which is crazy to me. While I was up about $2,000, I'm now only up, let's say, $601, right? This went from a high level here of $39,074 down to 38,000, where we are currently standing, 38,045. So not necessarily the best level of movement for today, but still in the past year, I still am at a positive. Now, what does this mean for my portfolio? Am I going to sell everything? No, I'm not going to panic sell everything. Long term is way better than playing it short term, right? Time in the market beats timing the market. So even though you see days like this, you can't overreact to days like this just because the market is crashing or falling or whatever. Dollar cost averaging comes at a low stage, comes at a high stage. You need to continue to just dollar cost average as if you were, investing normally without even paying attention to the overall gains. It does suck to see it up about $2,000 and then now see it at a level where it's only up, $500 or $600. It does hurt a little bit. It hurts the soul because I don't want to lose any money. But honestly, I didn't lose any money because I'm still up. It's just I lost the opportunity of kind of where that was. Now, I am heavily invested into things like ticker symbol O and SPHD. And, what other position am I heavily invested into? I believe I'm heavily invested into, here we go, VYM, and some others that are there. And I will consistently invest more into these plays. I don't plan on going too far outside of these. I might buy a couple more positions, but I do want to hold a lot of these positions and kind of level those up to get more dividends from those, but also, spread that kind of even across so that I can have consistent dividends. I can go over exactly how much I will gain every single month, how much I expect to gain over the next year, and maybe in another video. But I just wanted to talk about how the overall inflation data, CPI data, messed up my portfolio for not only just today, but for like the last 3 months. It kind of just destroyed everything. So anyways, guys, let me know what you're thinking about the markets. Let me know how it affected your portfolio. Are we expecting to see a bounce back anytime soon? Let me know your opinion there. But I'm going to get out of here, guys. Thank you so much for watching, for taking the time to watch my videos. And I will catch you guys in the next one. See ya.